Good afternoon, this is Rich Nelson with a wrap-up commodity comments here. Today is Wednesday. This is October 6th of 2010. As far as outside markets, kind of a mixed trade here. We'll note that crude at this little slightly higher trade it's sitting at right now. This is the highest price for crude since May 4th, and that's based on the nearby contracts. Those type of charts are used in the November contract of all things right now, though. But main point is crude is at its highest price since May 4th. On the conversely, we'll note the U.S. dollar currently trading at the lowest level since January 19th. So certainly one will make the point that overall these type of moves, or as far as outside markets, are a little supportive to grains in the big picture. As far as today's action, like I mentioned, kind of a mixed action for the crude and dollar change for the day, so not too much of an influence on the grains for just today at least. Over on the corn, down about 2 cents in the last trade here. This is not a settlement, of course. Keep in mind that even with this slightly mixed tone here today, we're still above this uptrend line that we talked about in numerous commentaries. Currently for today, that comes in at 472.25 is the uptrend line. So we're certainly still above that point on the charts. Soybeans down 7 in the last trade. Same thing with the soybeans. We're currently above their uptrend line. That hits at about 10.58 and keeping the uptrend in check. And wheat down a moderate 7 cents here. As far as news, we did get in some ending stock numbers today. So Allendale and other groups like ourselves put in some guesses to the newswires on Monday. Newswires have compiled those results. Yesterday they let us know about the average guess for production, and looks like today they let us know what the numbers compiled are for ending stocks. Surprisingly, see corn, they're expecting only a 32 million bushel increase for corn ending stocks. So here's the math behind it. You can do this yourself sitting at home. We've got a jump in beginning stocks of 322 million bushels. You take off 210 because that's what the average guess says production will fall. Then you're looking at a 32 million bushel increase for ending stocks. That means the trade believes that corn demand will increase by 80 million bushels. So let's do the math here. We're going to drop production by 210 million bushels, and yet demand is actually also going to increase by 80. Kind of surprising tone there. And that math usually doesn't jive out here. Usually when you have a drop in supply, you also have some tightening on demand as well. So a little surprising to see that one going on. We're a little suspicious of this corn ending stock number being so small. As far as the soybeans, the average trade is expecting to fall from 350 last month down to 334. So the trade is saying, you know what, exports have been good. We're going to lower them a little bit. We really can't argue with that idea here too much. The main point with beans is any stock above 300 is still ridiculously large. As far as the wheat numbers, 902 million bushels at the end of in the September report. They're expecting a moderate decline to 880. Looking at the usage categories and those type of things, we really can't see exactly where that number came from. That decline down to 880. Why the trade is believing that number. Certainly, as far as exports go, they've been kind of mixed here in the last couple of weeks. Not anything that's going to think that we need to revise some export numbers higher. In terms of other type of news to speak of, South Korea did purchase, I've got here, 218,000 tons in one purchase, as well as a separate purchase for 116,000 tons. That was a little supportive for corn. As far as the bean news, a little bearish. Brazil, overnight, the government will release its first estimate for soybean production. The trade is expecting a slight decline from last year, not too much though. Last year's bean production, 68.6. Going down to 67.9, so not that much of a decline from last year's production. So we still consider that number a little bearish. As far as the wheat side news for today, we did get a correction from Iraq. That was not a brand new sale. Keep in mind that's a correction. Earlier this week, that Iraq told us they purchased 250,000 tons of wheat. 100 of that was going to go to the U.S. This morning, they corrected that entire sale. They said, you know what, we didn't buy anything from anybody else. We only bought 50,000 tons of wheat from the U.S., and that was the entire sale. So that's also a little bearish for wheat here today. One thing we're talking about on the wrap-up comments tonight, take a look at them. We're going to talk about the soybean-corn spread. During much of spring and summer, it peaked at around 265, 270 or so. That's 2.65, 2.7. So soybean price divided by the corn price. Right now it's trading around just under 2.2. So at this point, the corn advancement in price compared to soybeans still favors corn getting the acres for 2011 here. Over on hogs, looks like it down about 10 cents for the October contract in last trade. One thing we'll point out is, we've got some bad news in the last couple of days. For instance, yesterday's pork cutout down a large $2.21. Well, why aren't we seeing these futures take these more like some big tumbles? Why aren't we seeing futures down a $1.50 or so, based on this very bad news? Key thing we're pointing out is look at open interest on these charts. Open interest has declined a good chunk here yesterday and also the day before. It's clear that traders are trying to get the heck out of things right now rather than go into brand new shorts. So this point looks kind of a mixed trade here for the hogs for the short term. This does not change at all the longer term bearish picture here. As far as cattle, one thing we point out is down 67 for the December contract today. This is the lowest trade on that December contract since August 13th I have here in my notes. So we are in a downtrend for cattle. Certainly a little disappointing in this end. As far as cash cattle, we see Nebraska traded from 150, most of the trades up to 152. That was still a little lower, though, from last week's average. Last week's average on a dress basis was 153. So a little negative tone developing the cash side here, so to speak. We'll point out that cash on the live-based end, bids are still 95. Asking prices have been moved down a notch. 97 to 99 is the current asking price. So overall, both for grains as well as livestock, kind of a mixed to slightly lower day here across the board here to speak of. One thing we'll talk about here in the coming commentaries, coming weeks for you guys to take a look at. We do have this annual conference we do in January. The dates have been set. They're set for January 21st and January 22nd. And we got a brand new lineup and a neat little agenda. You should really take a look at our website and take a look at that agenda. Some new things to speak of. It's going to last for 2 days now, not just more or less 1.5. So we got some great stuff we're packing into it, and it should be well worth your time to look at here. So overall, a little lower trade today. We're all getting ready for this new supply and demand report coming up on Friday. My name is Rich Nelson. If you have any questions about these, about the comments you heard today, or markets, marketing, trading, whatever, give us a call here. Our number here is 1-800-262-7538. Thanks a lot.